Good evening all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Monday, and we're now at the 7th of November, 2022. I'm surprised. I thought we'd walk in today to a down market in the stock market. I thought the metal markets would give up ground, the oil market would give up ground. I expected Meta to be up a little bit due to them saying they're going to cut a massive amount of workers. The confusion with Musk, of course, continues with Twitter. Fire him, hire him back. I mean, you talk about mismanagement. Come on. I don't get this. But what we're really facing now are two events. Over the weekend, China did not ease its zero-tolerance COVID policy. If anything, they said that it works and it works just fine. The market didn't break on that, though, and I'm surprised. Then I started saying, well, maybe it's the elections that the market is looking at, and it's saying, okay, we're about to see Republicans possibly take both chambers of Congress. One, I think it looks to be by most accounts a shoo-in, and the market rally. Okay, what if they don't win either? That could change that game pretty fast. I don't know. That's just an honest thing. I don't know why the markets held up as well as they did today, and I'm not going to try to figure it out because it doesn't matter. We have the election in front of us. On Thursday, we get the U.S. CPI number. That is what I'm going to focus on as much as the election results, obviously. Because if it's a weak number, the market will hope you get an even weaker number at the beginning of December and the Fed goes to 50 or 25 basis points. There'll be all kinds of talk. If it's a hot number, the market will say, okay, we have until the next CPI right in front of it. It'll come out in December, right in front of the FOMC meeting. Maybe that's the one where we start seeing the turn in prices. I don't know. It'll be something like that. And those are going to be the games that you see. So this CPI number is important, but because there's another one after it, right in front of the FOMC meeting in December, some of the sting of it is taken out. Does that make sense to you? I hope that it does. I told you I'd look for a lithium SPDR ETF, and here's an ETF on it. It's called LIT. And it's the Global X Lithium and Battery Tech ETF, and it's the one that I could find that I think fits the best. A number of you wrote me. I appreciate it. This was the one that just about everybody picked. I think there was one other, ALBA, if I'm correct, and somebody had picked that one, but this seems to be a better looking vehicle. We had a gap at a breakdown here, and if you'll notice, the market's come up to fill that gap. That's the first thing as a chartist I look at. There is no tradable pattern just yet. You have a lower low, a higher high, but I can't get away from the fact that you came down and you made an awful lot of congestion down here. After peaking at 82, you gave up about 25% of the value and fell back as low as, 63 or so, and you're just hanging right in there. There's resistance above the market at the 100-day average in green, and the gray is the 200-day average of closes. The Bollinger Band, you just got over and you're pulling back to it as of the close here. So that's interesting. And then I looked at where we're at. The market has spent a lot of power getting rid of an oversold condition into this. The odds of staying over the top band only 5% of the time. So I'm looking for a lot of resistance between right where we're at now, these numbers to pull back into the 18-day average. The bias is up. There is no trend and you're overbought. In Meta, you still have the embedded reading. I'm surprised. You gapped rather nicely. You're up 6% today. You haven't lost that reading. Okay? I told traders, and I don't mind telling you this morning, when I put out my morning subscriber video and the market was up, normally I'd be saying sell, and I told them you don't want to sell. We have a big announcement coming out of them, probably going to have a lot to do with releasing people. The market's liking that. Let's see what it does. We might be able to look hard at it tomorrow or the day after. I also didn't want to go into the election with it. Plus, it's a stock that's just been beaten down so bad that a bounce is more than due. I don't think you're changing the fortunes, though, of the company or the chart necessarily. In Apple, the cover spot was Friday. Today, you're getting a bounce off the Bollinger Band, but all the news is terrible that's coming out. They're not going to get the phones they want out of Foxconn. I was listening today to Tom Keene on Bloomberg. It sounds like he got one of the phones and he's not going to get it for a while. I was fortunate. I got my phone within 5 days of buying it, but I did it over a month ago and I didn't run into these shortages. So, and I love mine. I really like the Pro model. It's a big improvement off the 10 that I had. My wife has the 12 and it's a big improvement off that one too. I didn't want the regular 14 Plus. It looked too similar in the features that my wife's 12 had, and I wanted to change. All right, and so do the other people. The problem for Apple, their 14 Plus isn't selling. And that isn't good, and they're getting punished for it. The stock down $20 from the recent high. You tell me, did we not talk about the first challenge here? When you get up to a Bollinger Band in the 100-day average, I said there. I think the pros are coming out. Yeah, it went higher to the second level. So what? You were in the zone. That was the important thing. Disney. Disney acts like a stock that does not want to travel to the lower Bollinger Band. Now, it could if you get back through this 98.11 zone. Watch out. You could very quickly be wherever that Bollinger Band comes in. Is there anything bullish on the chart? No. Could the chart get bearish again? Yes, by getting under 98.11. But because it's oversold, it's hard to get short a market that's already oversold. In XLF, there is no trend. The market is higher high, lower low. If we step back together here, you see that the market had an embedded reading. Embedded being, and this is so important, you got to learn slow stochastics with the Bollinger Band. If you lose that, like you did here, unless you get back over 80 the very next day, which you did not do, the odds favor that price is going to visit this area before it makes a new high. Do I know if I'll be right? Of course, I don't know if I'll be right. I'm hoping I'm going to be, and so far this is what the market's doing, but it doesn't matter. One of the services I'm developing is going to play games like this and see, with a tight stop on a rally off of it, hey, is it worth having a stop over there looking for that to come down? I'm looking back on time on all these. Be a separate service. XLI, you come down, you kiss the embedded reading. Did you lose it? Okay, if you did, you gained it right back, so we don't have to go through it. It's still bullish. The market is still saying I can travel higher, maybe to 96.09. XSD, you're getting into the resistance zone. So now I think the pros took money off the table there. It fell back to support. It's not in a trend. You have a lower low, higher high. I think you're in a resistance area, no more than that. The XHB, the home builders, okay, you're neutral. Hard to want to be bullish the home builders, even though we have a home shortage, right? We know that there's not an abundance of product out there. And the people that didn't sell, do you really think they're going to try to sell in December in the Midwest? I don't think so. I think they wait for the spring market to come. So even more supply generally comes off the market, so we hang. But these are the builders. Are the builders doing anything? I think they're only going to build what they get a deposit on. I certainly wouldn't have been doing spec houses in this market with these interest rates. Energy sector, I remain bullish. You know, I've told my clients to be bullish in this market. My subscribers, if they listen, they are in the morning subscription service. You're embedded until the red line closes under 80. I'm still targeting the upper Bollinger Band and a window envelope. Remember, there are window envelopes you always look at. And in the gold market, you went from the lower Bollinger Band and in 24 hours, 48, you went to the upper band. That's not tradable. This was the cover short area, and this is if one got long, and I don't know how they would have, to get out. More important is the market's going sideways. Is the dollar topping? That's the big question. If the market smells the dollar is topping, the US dollar, this market will come alive, and that's what's going on. Both on Friday and today, you've broken the dollar index, and in both days, the metal markets held on. They came back. I thought they'd be down hard today when we heard that China had done nothing on COVID after the 26-cent rally. 26 cents a pound in copper is monstrous. Over $1 in silver an ounce. Gold up $45, $50 an ounce, and they gave back literally nothing. I was shocked to see that today. In SLV, look, you're not backing off at all. Now, would I ever tell a client to buy over a Bollinger Band? Slap me across the face if that's the case. It will never happen. This is where you step out of the market. It's excess. You're overbought. You're not embedding. I don't know what to do with that. I'm not bearish, but I wouldn't be bullish. And in copper, I look for the market to pull back into the Bollinger Band. It has gotten lower and low, higher high, but it's certainly acting like something is brewing. Dr. Copper is one of the most important markets you can watch. It tells you industrial activity, and in this case, Chinese industrial activity, because China's half the world consumption of copper. And I keep reading reports where they're looking to do things in the property markets again. They're looking at the infrastructure. They can turn inward. They're still going to need copper to do that. Keep your eye on this. Very important market. Then we get to TLT, and this is the Fed. So the Fed's not backing off. There's no reason to yet. They don't even have the CPI number. The jobs number, if anything, didn't give them any reason to back off of anything. Yes, it wasn't as big as the September number, the jobs number we saw last week. That's good. But it also wasn't a weak number at 260,000 jobs, all right? That's not weak. What is the CPI going to be? Are prices falling all around us? That's going to be what we look at. Cars, and if you're watching all the stations on business finance, you're hearing about how used cars are falling and how the lots are getting new cars. So that's a good thing because that does pull down the CPI to a degree. We watch that number. But what about everything else? And there's plenty there. Are we seeing the Christmas sales? Are we seeing goods and clothing prices fall? Not seeing them go up. So there's certain things that are starting to show itself. Here's a market I'm concerned about. Is the dollar peaked? It's not bullish anymore. You have a higher high, lower low. Is the FXE taken off to the upside? Well, it's not a trend. You got a lower and low, higher high. They're mirrors of each other. But this is what you watch. You watch what happens if you get up to the 100-day average in the Bollinger Band. Watch the Bollinger Bands in the slow stochastic. Learn how to work with them. I teach it next in my charting course on enhanced Bollinger Bands, 13 short chapters of video. You get the charting software, you get access to my morning subscriber video, and you're going to learn. And it's not expensive. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.